Okay, what's your favorite beer?
What's my favorite beer? It is called Juicy Ass. It is a Flying Monkeys beer, and I wish I brought it today because I should have prepared for this question.
So, welcome to the Future's Edge podcast. I'm Jim Murio. As always, the brains behind the operation and executive producer, Bob Iacchino. Today, we have Stephanie Hughes, finance reporter for the Financial Post, covering Canadian banks, central banks, mortgages, general macroeconomics. And I feel this is exciting for me because I've spent a lot of time bashing the Federal Reserve. I'm sincerely hoping that today we can bash the Canadian Central Bank as well. Thank you for joining us, Steph.
Well, thanks for having me, gents. I'm looking forward to getting into central banks, housing, all those hot.
Oh, no. Let's not get ahead of ourselves. First, we got to get into pop cultures. What's your favorite? What's the biggest difference between Canadian people and American people that you've noticed in your lifetime?
Oh my goodness, that's an interesting question.
I hope you didn't think this was going to be easy. We challenge you. It's what we do.
Can I ask you a more blunt question? Do we say fuck more than you guys do?
Actually, I don't know. We have a funny way of saying of swear. We've got like weird little Canuckisms, I would say. But no, we say fuck like very, very frequently.
Good. We're very comfortable with that.
Yeah. So being in Toronto, I don't see too much of a difference between Canadians and Americans. To be honest, it's we're all part of the same, like that same just interesting ecosystem there. No, I got a soft spot for the Americans there.
Okay, what's your favorite beer?
What's my favorite beer? It is called Juicy Ass. It is a Flying Monkeys beer, and I wish I brought it today because I should have prepared for this question. But basically, it's a very colorful can from a Toronto-based brewery, and it's delicious. It's zesty. It's an IPA. I think it won multiple awards, and it's part of the usual rotation that I have. And it's always just fun to say I'm going to the beer store to grab a Juicy Ass. So
no, that's not bad. Yeah, I do like that.
There's a difference. Beer store.
Yeah, there you go. There's the difference. We've got a store specifically for beer and I guess coolers and all that. But
hold it though. There's not hard liquor at the same beer store.
I think every once in a while you can find some like hidden hard liquor gem, but for me it's like an in and out operation. I just grab the beer, just take off. But yeah, I guess in the US, the alcohol is a little bit more widely available. So here it's mostly like some grocery stores hold it, but that was only like a recent thing. We have Beer Store, LCBO, the Liquor Control Board of Ontario. Then there might be some other provincial ways of selling booze, but yeah, those are pretty much the ways to get booze here.
Okay, then the last get to know Steph question is this: when you go on vacation, so to me, I picture Canada as this cold north frozen tundra. Do you head to where there's palm trees and beaches, and if so, where?
I'm actually more of a. This is probably going to be a boring answer, but I like I like countries that interest me, like something that's more of like a cultural experience or like I'm a history dork, so I kind of like things that are just steeped in history. So back when I used to do more solo traveling before the pandemic, I would go to, or I went to Italy, went to Japan. Japan, if you haven't been there, you got to go. It's phenomenal culturally, historically, and
it's nuts.
It's nuts. Yeah,
it's nuts.
I love it. I can't wait to go back.
Awesome. Okay, now to the first real question.
Okay.
And I loved your notes, by the way, that you sent. So thorough. So talking about the mortgage market and the real estate market in general, I've been in many arguments over the past couple months, and I think that what we're seeing right here does not parallel well to 2005, 2006, 2007. And the reason I back that up with is that there was 3 decades essentially of people building up positions in housing and taking risk in real estate that they shouldn't have, at least in America. And this time there's not. Your brother-in-law, who's an electrician, doesn't own 5 homes on adjustable rate mortgages that he was flipping prior to this, like it was in 2006. Now in Canada, it's a little bit different. There has been a pretty long-term wildly parabolic real estate rally coming into this crisis, has there not?
There absolutely has been. And like to your point, so in 2017, I think we saw that 2017, 2018, we saw that that bubble kind of burst in Toronto. So prices went to a certain point. everybody was just hoping and praying for a crash, got a little bit of a deflation, but then it's like you mentioned, heading into this pandemic crisis, housing was already not affordable in cities like Toronto, Vancouver, Montreal. Those were the usual suspects, and then it just got worse. It was kind of interesting because when you see the pandemic, you assume that so many people assume that prices would have just dropped. There'd be so much job loss, there'd be this, that, and the other thing, and that just didn't happen. The opposite was actually the case. We saw double-digit increases, and with those increases and more people loading into mortgage debt, now we've got highly leveraged Canadians. And it's kind of funny. I was at a David Rosenberg event this morning, and he was creating those parallels with the global financial crisis, and he's saying it's worse now than, or like the stakes are higher now than they were at the time leading into that crisis when he was really pounding the table. But to your point, there's probably more of a regulatory more levers there that hopefully might keep from an '08 from happening again. But I mean, we're looking at insane levels of debt that is just, quite frankly, not sustainable.
Okay, so I know David Rosenberg, and I like David Rosenberg, but I do have a criticism, and I'm not trying to bash him if he's a friend of yours or anything, is that it seems to me that his needle is definitely towards the sky is falling, not quite to the level of Peter Schiff, but definitely on that side. I think he's predicted, 10 out of the last 2 financial crises. Do you agree with, and again, if you don't want to bash him, just say no, but I do think he tends too much toward the skies falling. Do you agree or no?
I think he definitely leans bearish. I mean, anybody who reads anything he puts out, most of his takes are bearish. He actually kind of had a more optimistic take when it came to like the latter half of this year. I believe his outlook was that in the short term, things are going to be tough. Things are going to enter into a recession. But then coming out of that, he was actually saying there's going to be a point this year where he flips into being a bull, which I've followed his, yeah, exactly. I followed his work for a couple of years, and I've been in this industry for too long, but I've never really heard a bullish sentiment from him. So that was fascinating, and I've looked forward to how his columns evolve. But short term, sky is falling. Longer term, I mean, it's going to be a recession that we eventually get out of. It's like, everything's transitory, right?
Okay, I got one more question before I let Bobby in. And sorry, been so long-winded, Bobby. So you talked about during the pandemic mitigation, when we thought here that prices would go down and we thought there'd be a mass recession, but our central bank brilliantly just flooded cash into the system. I assume the Canadian bank did the same thing. And are they pulling back the money supply at this point in time?
Yeah, so they did the exact same thing, maybe to a lesser extent than the Fed, but or maybe not. They basically worked in lockstep. So all the central banks kind of worked in concert to lower rates, make the borrowing environment more accommodative, bring more liquidity to the financial system, so that we could just kind of put foam on the runway here, I guess, so to speak, so that when the plane comes down, there's more of a buffer there before the crash. Now we're starting to see the quantitative or the tightening phase. So basically just getting letting the bonds roll off the balance sheet there. But also, more interestingly, which really plays into the whole housing chat and economic chat, why we're having this recession debate, is that they undertook one of their most aggressive rate hiking cycles pretty much on record last year. They've increased rates from 0.25% to 4.25%. So 400 basis points, people notice that within 1 year. So I know we're kind of looking at the tail end of that. There's still, they're going to have their next policy meeting next week. It's a toss up between whether they hold or hit us with one more quarter point hike, but we'll have to see. But the economy is still like an excess demand. The bank would tell you that jobs numbers that we saw a couple weeks ago, or last week, I believe. Sorry, timing is a complete blur here, but it completely just blew past estimates, and we're not seeing as far a contraction from what I read out there as the bank would need to kind of pull back demand so that supply has a chance to catch up. So looks like we're at the tail end, but it'll be interesting to see how next week pans out.
First of all, I want to say happy Friday, Steph. And it's not Friday, unfortunately. Normally we record this on Fridays, and we're recording this on Thursday. And I think, there's an important point there. If you don't follow Steph, you should, because she does these wrap ups where she always starts with Happy Friday. And it's all I think. It's not all I think about. I think about what you say, but it's just funny to me because that has almost become your trademark, this Happy Friday thing.
Well, and I
I'm
mean it.
so mad we're not doing this on Friday. I wanted to ask you two things. Number one, first of all, Jimmy, I like your comment about David Rosenberg, Sky's Falling, because you can read Rosenberg and then you can read Jeremy Siegel and you kind of figure out what in the middle is true. Because as with media, things are usually somewhere in the middle of what we see on the mainstream. And I think Rosenberg can be Fox News or MSNBC, depending on what you think. Jeremy Siegel could be Fox News or MSNBC, depending on what you think. The two extremes are good. You talk about the central banks and how big of a jump they made. We got, important to say this is Thursday because we got Christine Lagarde today who basically talked to market participants. You guys see that? I mean, she essentially said, you should change your view. I advise you to change your view. That's what she said. I mean, I assume she
to
was
be more bearish, right?
Yeah, I mean, I don't, she didn't mention a specific sector of the market. So I don't know, she's talking about gold investors, equity investors, interest rate traders. I don't know who she was talking to. She was talking to market participants. She said, I advise you to change your view. So again, the question becomes, and you can answer this as your own personal feeling, Steph, or the people you speak to or interview. I don't care which one it is. Do you believe the central banks?
Do I believe the central banks as far as
them holding rates higher for longer, staying higher, keeping them higher? Do you believe, because the bond market right now does not?
Yeah, so I'll bring it back to the central bank I'm most familiar with, which is the Bank of Canada.
Fair enough.
Tiff Macklem
They kind of led, right? I mean, they were one of the first ones to get aggressive.
Yeah, that's completely fair. And then you see these laggards like Bank of Japan, which to my knowledge still hasn't raised rates or anything. So it's that's kind of like a central bank black sheep. But bringing it back to Canada, I know that the message that Macklem, Bank of Canada Governor Tiff Macklem has been trying to get across this whole time was that he wasn't going to rest until headline inflation reached 2%. That's like no more, no less. He wasn't going to accept anything less than that. Good luck. Yeah, that's no easy feat. So when we talk about higher for longer, I think it's completely data dependent. Do I believe him? I think I think he believes it when he says it. It's tough to kind of gauge whether it will happen or like whether it will happen next year. I think it will happen this year, or whether it'll happen eventually. I do think eventually we're going to get there. I just don't know what wake of destruction, recession or otherwise, will be kind of left afterwards. But so far, the economy has been more resilient than we were expecting. Like 6 months ago, people were expecting a brick wall turning over into 2023. So I believe he believes in what he's saying. I have my own, it's my job to be skeptical, but we'll have to see what the data ultimately tells us. And it looks like, to be completely fair to him, the inflation latest reading being 6.3% this week, it's down from its 8.1% peak. I believe it was in June. So we're moving in the right direction, but it's going to take time. It's going to take pain. And like Jimmy said, good luck, right?
Right. So my question for you, Steph, but I want your answer on the same thing too. You just said about the data, and we saw our CPI data, and pretty much everything is coming down relatively quickly except for food and energy. And in my mind, and I've been saying this, I don't know if I'm exactly right, but they seem to me to be the two least sensitive to interest rate hikes, much more sensitive to regulations, things like that. So in Canada, the reason I even thought of this question is because Canada was starting to think about the same thing that Sri Lanka did, which was to, make illegal synthetic fertilizers. I don't know how up to date you are on that, but my point is this: is that I think we're seeing inflation come down fast as shit, except for the two things that aren't going to be taken care of by higher interest rates. If they keep higher interest rates longer, that's really not going to have the effect they want. Am I wrong or no?
I mean, well, and I get this question a lot where, there's a lot of dynamics that are beyond their control. So global commodities markets, or like the price of gas and how much we pay to just go from place to place. I don't know if you can monetary policy your way out of that, or even more pressing, the supply chain snarls and the shortages we're seeing. I mean, you can hike rates as much as you want, but is that going to fix the backlog issues at the port of Shanghai? I don't know. Probably not. I don't think that's how it works. But I guess the point would be to take the demand out. But to your point, you tapped into something really interesting here. The first casualties of a
It's an accident when I tap into something really interesting. But anyway, go on.
But yeah, the first casualties of a rising rate environment are housing. It's been a gasoline story with inflation going down pretty quickly, or use your expression, fast as shit. Mostly because just the commodities markets have been, we're seeing that pullback there. So every time I read the data read, it was pretty much led by, okay, gasoline being the biggest mover going down. I think shelter replacement costs more recently have been, or maybe it wasn't shelter replacement costs, but yeah, housing is also kind of easing on the ownership side, not so much on the rental side, because of course we're seeing more upward pressure on rent costs. So yeah, it's moving in tandem. Food is going to be a tougher one to kind of, because you can pull demand out of the market. That means people won't be buying, or probably less likely to buy appliances, or less likely to go on vacation, for example, but they're not going to be less likely to eat, I don't think, because you need to eat. That's like, you can't pull the demand out of living, right? I hope not. Anyway, that's a dark thought, but but to the point, like food is harder to bring down because we've got those weather issues and supply chain issues.
Yeah.
So I'm always glad when Jimmy says, I want your opinion on this too, because then my questions, which are normally statements, I can actually make a statement instead of hiding it in a question. I think the issue here is when central banks say we want to see noticeable improvement, to the Bank of Canada Governor Macklem's, I really like his specificity on it, right? Until we see year over year inflation gets 2%. I don't think that means he's going to continue to hike until a 2% print comes.
Yeah,
right.
exactly.
I think what that means is they're going to continue to try and hold monetary policy on the tighter side than what we're used to. So a couple of things to this. Services inflation, which is essentially the wages of service people, right, for the most part, because there's no goods, there's no overhead to go into that other than wages. Jimmy, correct me if I'm wrong on that. By the way, Steph, Jim owns a restaurant called Brant's of Palatine. Great burgers if you ever get yourself to Illinois. Anyway, services inflation is basically services wages. Goods have collapsed. Goods inflation has collapsed. Part of the reason we're still at 6% in both our countries is because services inflation has not. Now, since December 9th, crude oil is up 15%. Since last August, copper's up about 35%. Commodities are crawling back higher. Now, I'm not predicting higher inflation. Well, let me rephrase that. I'm not predicting that the fall in inflation is going to stop. I'm predicting that the speed with which it's falling is going to slow. It's going to start falling a lot more slowly. And I think that's going to make central banks uncomfortable, where I guess the data dependent, Steph, you mentioned this, they're data dependent. What data? It certainly isn't going to be pure CPI or pure PCE. It can't be, no. Right? So I think, and Jimmy, correct me if I'm wrong on this, I think what Jimmy thinks is that they're going to be influenced by economic data and economic suffering. And I don't know if they are this time. I don't know if I
think they are, Steph.
I know. And Steph, if you've ever seen this podcast before, that Jimmy and I sort of have a friendly argument on this point, is I think I don't know, man. I don't think they care this time. I don't know. Steph, what do you think?
Well, okay. So looking at the data that's outside of CPI, just like purely looking at that.
Housing's a great one.
Housing's a great one, and how much, I guess, to use the term suffering that is required to bring the inflation dragon to heel. I don't know how much
suffering, right?
Yeah, definitely suffering. Tiff Macklem talks about the jobs market, and not that he wants not that he's like really excited at the prospect of everybody losing their jobs so that we can pull that excess demand out of the economy, but he talked about how the amount of jobs, the jobs data is kind of showing that the economy is in excess demand. So what he was hoping, though, was, I kind of put the question to him, the job vacancy buffer that he keeps pointing to, job vacancy buffer essentially being that the hope is that instead of laying people off, people will just take their help wanted signs off the storefront. So he's expecting that if people follow that logic or follow that mentality with this buffer, hopefully the unemployment rate won't be as high as prior recessions. So that's his kind of a saving grace. But he's also understanding that because it's going to be this recession that we're all waiting for, there's going to be some suffering. There's going to be some people losing their jobs. So that's kind of part of this whole dynamic here, especially if businesses have to contend with other prices or like other costs of running a business, like higher borrowing costs, higher inflation, getting hit with that double whammy. It might mean that they're just not able to keep a full ship of staff around. And we're kind of seeing this already, as Rosenberg pointed out this morning, is that we're seeing a decline in, even on both sides of the border, but we're seeing a decline in hours worked. So first kind of step to, before people lay people off, or businesses lay people off, it's pulling back on the hours worked. So your shifts are getting cut, or they're diminished, or they're this, that, and the other thing. And it's because for the most part, businesses just can't afford a full ship all the time in a very high inflation, high rising rate environment. So sorry to bring it, like, this is a very long-winded way of saying to bring it back. Jobs are definitely, at least with the Bank of Canada, that's something that they're pretty focused on. But Macklem is trying to find some way to kind of navigate that, where we're not seeing a disastrous amount of unemployment, but hopefully there's some sort of like buffer in place to bring the economy back to balance by doing so also minimizing the amount of suffering. But that's another data point that we're all paying very close attention to, and GDP, obviously.
I think housing's this is why I was glad we have you on right now, is because housing, I think, is a major canary in the coal mine for this, right? I mean, if you look at it from a perspective of, you made the comment I thought was hilarious and accurate. I hope people don't stop eating. Where are they going to live? And this is why, like, I'm pretty convinced that the word suffering is the right word, because if people lose their jobs in the current environment where housing is still high, and I'll give you an example. I'm very close with somebody here down in Florida that got about a 20% discount off of a builder default. So somebody had built a house, right? Did all these upgrades. This is the house they wanted. And then they couldn't get a loan because from the time they started building it, put their earnest money down, to the time they needed to close, they could no longer afford the loan. So this particular person is a relative of mine, just swooped in and paid 20% less than that person. Now, if you go on Redfin and look at the value of that person's house that they literally just bought, they closed December 29th, it's about 7,000 lower than what they paid. So housing prices are falling, but there's still this, I want to say something and I can't remember the person who said it. And I try really hard to credit the people who say these things, but
it was me.
It wasn't Jimmy. It wasn't Jimmy. It wasn't Stephanie. It was, he's from Morgan Stanley. He spent about an hour on Bloomberg this morning. I really wanted to credit him for these statements, but one of the things he said is it took 27 years for rates to get from 20% to zero. And it was down, up, a series of lower highs and lower lows on rates. And he believes that the path up is going to be the same. So to Jimmy's point, they're probably not going to keep rates at whatever the terminal rate here in the US or in Canada is, but they're also probably not going back to zero. That was his take on it. And then I thought about it from a perspective of housing, and that's what I'd like you to comment on. So housing is falling, and then there's people like my relative who can swoop in and buy the 20% cheaper houses, maybe bumping up the price a little bit, and then they fall again. Is that what you think you're going to see?
You know what? And it's kind of interesting because, yeah, the prices are falling, but then we're also seeing mortgage carrying costs go up because of the rate hike. So it's prices are falling. Awesome. Does that mean things are more affordable? No, it's not. And sorry, I say awesome as in like, because I'm a renter and would like to own it, but it's not making the market any more affordable. So to talk about, to your point.
So affordability is different than price, is your point.
Yeah, exactly. And if we're looking at, developers trying to offload these developments, this was something that was even happening before the pandemic when, building costs were fluctuating. A lot of condos were I don't have a number on hand, but there was a noticeable amount of condo projects that were being canceled. So the pre-sale market was very frustrating for a lot of people. And we're looking at, I remember going to a conference last fall where condo professionals were saying that people were just trying to offload these liabilities at this point, because this thing, like, it was like an asset that was in free fall, but they still had to pay quite a bit on it. So just as far as holding the mortgage goes. So yeah, to that point, there will be a floor, I think, set, especially in Canada, because we have such strong immigration targets that we're just pulling demand back into the country by increasing our immigration. So, and they have to live somewhere. So whether that's on the renting side and whether some of them buy homes, that's going to kind of sustain some level of demand, even though a lot of people just can't afford a home right now. So that was another major theme in that conference, the Veritas conference. A lot of very smart people, very housing focused. But that was kind of one of the takeaways, is that yeah, we're seeing double-digit declines in Toronto and Vancouver, and elsewhere. But there's like the amount of declines that we're going to see this year, it seems like people are kind of expecting that the worst of the free fall has happened, and that the floor is going to be higher than people expect. So,
okay, Steph, there's two things I want to address here, and it's going back to a point I made a second ago, is that in 2006 or whenever the bullshit started to happen and we started to crash, there was people who owned 5 and 6 homes. I believe at the tail end of the bubble, I think it's of the multifamily units, like 60 to 70% were not primary residents of the people being bought. Okay, I think it's different now. Plus, you mentioned in your note you sent about adjustable rate mortgages. In the United States, it doesn't seem like there's a ton of adjustable rate mortgages because rates were pretty much zeroed out over the whole curve. So there's no reason to lock in. In Canada, is it different? And if we're going to see a real bottoming in price, like if it's your primary residence, you're going to scrimp and save and do everything you can and not leave your house and not put it up for sale. If it's your third house, it's a big difference. Aren't these things wildly different than what they were before?
I think they might be. And it's your point about primary, secondary, and tertiary residences. I think we see that play out more in the condo market. That's more of a speculative playground for real estate owners. And it makes sense. Like, I think some people still treat the condo as a starter home before they upgrade to like a detached, but a lot of people rent it out. Or God forbid, they use it as an Airbnb, or I'm not a fan of Airbnbs, but or they just leave it
We
empty.
gathered that, right?
Yes. So yeah, so I think there might be some speculation, but a lot of the people that I think are trying to get into the market right now are people who just want that stability of owning a home that they can truly call their own, or buying for their kids, or like if it is a secondary home, maybe it's more so that I think the steam first and foremost was taken out of the speculative side of things, and I think that was evidenced by the condo market during the pandemic. I think there was some rebound. I haven't seen that, or I haven't followed that as closely, but yeah, I would say as far as owning multiple properties, it's more so there, because I think the returns that you get on owning like a multi-million-dollar home in Toronto, who knows, but that's a huge liability to have if you have more than one property. Don't know if it's the same as, yeah, it kind of seemed like a Wild West in the US with like leading up to the 08 crisis, where to your point, there were people who had multiple properties who the checks and balances were such that it was pretty diminished, and that they were kind of they might not have had the best credit, and then everything just kind of fell like a house of cards at the end of the day with these mortgages. So am I seeing that here? I think there's just too many I think it's too hard to actually kind of set that up for yourself as far as like stress tests go in Canada. So yeah, I think it's a bit different, but I don't think the risks are like, I think the risks are very much present still because of the debt picture.
So what about the cancellation rate? You mentioned that it's about 68% in the US. Is it similar in Canada? Is it better or worse? I mean, we obviously have a mess of an immigration policy, and I'm not really familiar with Canada's, but you said there's initiatives. So is the cancellation rate, has immigration started to affect that in Canada or no?
You know, I was quite surprised. I don't know about too much of the U.S. Housing market. I was surprised to see that cancellation rate by the that one survey there. It's somewhere in my notes, but I don't know if we have the same granular data as like explaining to what degree there's a cancellation, or how many projects are being canceled here. It might be out there. I don't have it with me, but I don't know if immigration will effectively fuel that. I think we're seeing more. I've been told that we're seeing a lot more multifamily projects being set up. I've yet to see. We're definitely seeing the condos. Like there's you look at the Toronto skyline, there's cranes everywhere, there's new construction. Will it be enough to address will it be enough to give enough homes for immigrants? I don't see that really happening definitely not quickly, but yeah, that was one of the biggest challenges there, where we're trying to get all these immigrants in here. We welcome immigrants. I think it'd be hard pressed to find a Canadian who's saying, or maybe you wouldn't, but we're a very immigrant welcoming country, but the infrastructure to actually house and accommodate all of them is not there. So we need to really address that side of things.
Because if I remember correctly, Toronto's not cheap. I actually have family in Toronto, and they complain about the costs over and over again. You would think somebody who's new to the country, the condos you're seeing in Toronto are not the ones. And then a second question to that is, during the pandemic, we saw a lot of people leaving cities for more space, for less money, to set up home offices, as I have here. Is that something you're seeing as well?
Oh, that we absolutely saw that in Toronto. A lot of these rental accommodations quickly emptied out, especially in condos. People fled the city. It was like a ghost town. You should have like walked over. I think it was like any major city. Like I would imagine walking around Chicago during the height of the pandemic, it was pretty ghostly. A lot of these are young people who lost their jobs because they might have been working at Starbucks or like something very services related that can't really work from home in that kind of an environment. So they had to move back in with their parents, or people who did keep their jobs decided, you know what, this condo isn't doing it for me. To your point, they need more space. They want that green backyard. Actually, my partner and I made a similar move, like kind of at the tail end of the pandemic, where we decided that high living, or like that apartment living, was not great, and we're still, or we're kind of finished with it. So we're still living on the west end of Toronto, but we've got that patch of green in the backyard. We're renting the main floor of a house, and it's not cheap. So it's going to show that the rent situation is still pretty bonkers. It did come down a bit during the pandemic, but a lot of, like, as the demand swung to home ownership when rates were low. But to that point, it's a lot of people went to the suburbs, and I think a lot of economists were expecting that it would swing back and everybody would go back to the cities. But I think we're in this kind of holding pattern where employees are kind of dragging their heels about being brought back to the office, and there's kind of almost like a standoff there. I wonder to what degree that pendulum, because it's a job seekers market to a large effect right now. I wonder to what degree that pendulum will swing back to employers saying, okay, their unemployment is rising. These job vacancies aren't really there. You don't really have your pick of the crop anymore. We're going to get you to come back to the office. So I wonder how much that will drive the return to city attitude. But we're seeing more life in the city. I just don't know how many people are actively living here, or just kind of commuting and working and then going back to their spacious abodes out in the suburbs.
Okay, I have a question about immigration to dig down into that a little bit. And both Bobby and I, for some historical reference, I grew up in immigrant households, and I now live in the town. And there's going to be a point to this. I'm not just telling you my life story. I live in a town that, Motorola has been a huge employer in for the last 50 years, or whatever. So there's been a lot of influx of engineers from Asian countries, and my neighborhood is highly influenced by Japanese and Korean engineers and Indian people, which is fantastic. But my point is that there's different types of immigration. There's refugee immigration, and there's skills coming for jobs immigration. And I know in our country, in the United States, we obviously have both. What's immigration like? Vancouver is such an interesting state. I have lots of friends in Vancouver, and every one of them has one thing in common, and they are of Asian descent. When and how did that happen? That Vancouver became a city that was, what is it, 30%? What's the history of this?
I'm not much of a Vancouver historian, but yeah, I think it definitely traces back to colonial, or just past the colonial days. I remember seeing a lot of these historic 1900s, early 1900s photos of Chinese immigrants. They had storefronts, went through a lot of adversity at the time. I think there was one major event where the white Vancouverites started smashing storefronts. It was a really messy situation. But just to go back to it, it shows that they've been there for a while. There's a very strong Chinese community in Vancouver. In Toronto, I think it's pretty much a cultural mosaic. There's a bunch of people from different backgrounds. And to your point, I would say it's a mix of refugee, but also economic skilled people coming in here, working and from my experience, tech, finance. I mean, some of my colleagues are immigrants, so it's kind of across the board. But I would say it's a mix of it's a little bit of everything, anything and everything, I guess, if I had to like really summarize it in a concise way.
Interesting.
Oh, yeah,
Before I ask you, go Bob.
Go ahead, Jimmy. Go ahead, Jimmy.
No, because I had asked about the adjustable rate mortgage things, and I don't think we hit upon it well enough. You in your notes said there was a much higher percentage there than it seemed like there is here. Is that correct? And then the only reason, because I want to broaden this out, the rates thing, I've been arguing for forever that we're not seeing the full efficacy of rates, of the rate hikes, because it takes a long time to filter into the system. Because it's not just adjustable rate mortgages, it's governments that have to roll their debt, companies that have to roll their debt. But back to the adjustable rate mortgage part on real estate, is there a high percentage in Canada?
I believe so. I think the way it kind of shakes out is the last time I checked, I believe there was more variable rate than fixed rate mortgages. People just kind of don't want to lock in, and it made. I guess I'm not too much of a mortgage expert, but somebody who was smarter than me in that space would say that a lot of Canadians are kind of stuck in this older rule book where it makes more sense to not lock in at a lower rate, but for some reason that he could explain better than I could. But yeah, and one thing that we're seeing in the variable rate fixed payment mortgage space that I thought was really interesting from the Bank of Canada was that a lot of them are hitting their trigger rates, meaning that they're just kind of paying the interest on payments. And I think it was 50% of variable rate fixed payment mortgages, or nearly 13% of all Canadian mortgages. Like that's not nothing. I don't know how that kind of compares to the US side. But yeah, I'm pretty sure that the Canadian picture, it's more of a variable rate story. That just
Bobby, nobody was getting variable rates in the United States over the last 10 years, have they? Rates were low as shit.
I just found an estimate here, and this is finder.com. I don't know if it's reliable or not. They say adjustable rate mortgages in the US are upwards of 20% of the mortgages.
Really? I would have never guessed that. By the way, if it's on the internet,
I'm shocked by that.
It's true, because
again,
everything on the internet is definitely true.
my family member that bought a house did a 15-year fixed. It's because he's 75 and they're still low for him being a 75-year-old human being. He's like, wow, this is cheap, compared to what they were in the 70s and the 80s.
Well, my first mortgage was 10%. Yeah.
Yeah, my first one was, I think it was 8.6, and I was doing backflips. I mean, I was out of my mind happy with 8.6.
Oh yeah, my dad was like, "You got a 10% mortgage? That's fantastic. Lock it in."
Lock it in. But I mean, and you think about it. So these figures are from 2020. So the three, it doesn't separate between 3-year, 1 year, and 5-year, 1 year, whatever they are now. I hope they were at least 7-year 1 years, given how low rates were. Some of those are going to be coming due soon. So we should see that stress if that's the case. I mean, we should be able to see it in the data somewhere. Steph, I'm not sure where, but in the Canadian housing market, where would you see that stress?
That stress, I know that Bank of Canada has been very cognizant of it. They've been keeping track that 50% variable rate hitting their trigger rates data does come from the Bank of Canada. OSFI is also going to be paying attention, very attentive to that. Don't know to what degree CMHC would be focusing on that. They might be focusing on more or different data, or just the mortgage data in their own pool. But I would say that Bank of Canada and OSFI would have some sort of like broad reading on that. OSFI being the Office of the Superintendent of Financial Institutions. They're the regulators that adjust the mortgage levers to ensure that people who are getting into the housing market actually have some sort of ability to pay for it. It's kind of like a stress testing their ability to cover that. So yeah, I would imagine that just how that shakes out and how many mortgages are due soon. I remember this is frustrating because I remember reading about this like not long ago, like how many mortgages are due soon and what the stakes are. And I completely forgot what the numbers were, but it was a number that was higher than I was expecting. And it surprised me, and it probably shouldn't have, but I think there's I don't want to use the word reckoning, but it might be accurate. But there's going to be a lot of mortgage holders that are going to hit such a reality check, because what they're like I go back to the 400 basis point interest rate increase, and it depends when they locked in, because we had interest rates that were so low for so long, that they're going to wake up one morning and all of a sudden, holy shit, their mortgage costs a lot more.
Jimmy, don't you think this is another one of these examples of things that we, okay, so in 2001, tech stocks would never go down, and then they did. Then in 2008, housing prices could never go down. You could be the leverage as you want, and then they did. And I'm positive mortgage brokers said to people, look, you can buy a little bit more expensive house if you go adjustable. And even if rates go up, they're not going to go up that much. And they did. They went up very much, to Stephanie's point, about 400 basis points in less than a year, basically.
Right. And that leads to my question too. And so we got to have some sort of takeaway from this whole discussion. So the question in my mind is like, when and how and where is the shit going to hit the fan if we're really in for tough sledding? And Bobby and I have lived through this twice. And he mentioned tech stocks, and he mentioned the housing crisis. Are we all saying, stuff, this goes to you, that we are going to start seeing this first in the housing market, and then we're going to know we're up a creek?
I think we're going to see it, if I had to guess the order of things. So where I first saw it was, it's going to sound strange, or actually it sounds related, but strangely related, bank earnings, because what they tell you, the big banks tell you in their earnings, is that they're setting aside more money for loan loss provisions. So loans potentially going sour, they're bulking up their reserves, they're bracing themselves if people can't pay their mortgages. So that's where I first started seeing that people were really cautious about this. You'll see it in the jobs market, because as we mentioned, if somebody loses their job, it's going to be that much harder to actually pay for their mortgage. So if we start to see the unemployment rate creep up, we can start to expect that some people are going to face a lot of strain there. Don't know to what degree that's going to hit foreclosures. I've spoken with economists that are saying that banks are more likely now than before the crisis to work with their clients and try to work out something, because it's not in the bank's interest to foreclose on a house or just have these loans go south. But so it's going to be all that. Prices coming down, I think a lot of people point to that as a barometer, and it is a very notable barometer if you bought at the peak of the real estate prices throughout the pandemic. But as long as people keep making payments on that house, they might be underwater. It doesn't really, as long as they don't sell, then they're kind of going to be okay as long as they make those payments. So yeah, it sucks that you're paying more on your house than it's worth, but it goes back to my point of people treating it like a shelter, a place that they plan on living in for the long run. They probably don't expect to sell anytime soon, so they can take a bit of a price dip before it goes up again. But if they lose their job and they can't cover the payments, that's when the shit hits the fan. I think it traces back to how the big banks are feeling about it, which that tells me that they're cautious, and how many Canadians are actively employed in this market. And if it turns out that a lot of Canadians are suddenly finding themselves out of work, then that's when we start to see these knock-on effects throughout the broader housing market, the economy, because the Canadian economy is very dependent on housing, and there's a lot of housing related jobs. So I think that's kind of how we see if I had to put it my perspective, that's how I see the dominoes kind of going.
I think that's a great point. I think that's something that people need to understand is you see people just doing a dance in the street when they paid $600 for their house. This happened a lot here in Florida. I'm originally from Chicago, but I moved to Florida about 2.5 years ago permanently. And I saw people I'm so rich now because I paid $500,000 2 years ago, and now my neighbor sold for 1.2. Well, now their other neighbor sold for 9. And they feel less rich. And to your point, Stephanie, I think this is a phenomenal point. I'll give my sister as an example. My sister bought at the height of the 2008 housing bubble, but she raised 3 kids. The second one just went to University of Illinois, Jim. The other one's at Purdue. And the third one is now in high school, and she's now back above water from what she paid. And she doesn't care because she lived in that house. She raised 3 girls in it, and it did what it was supposed to do, and they could afford their mortgage every single month, right? So it did what it was supposed to do. And that's how people used to view housing, but this has nothing to do with my question. You mentioned, I think people need to pay attention to you in this particular point. I think this was a phenomenal point. you mentioned the way the banks report their home loan problems or lack of problems. Am I wrong in saying what you do is alternative media? It is, right?
I would actually say that's mainstream media. We're a national newspaper that,
Okay.
a Financial Post that is, used to be
Okay.
on the freelance side, but.
Well, I think you freelance honestly, because otherwise I wouldn't be saying this. So that's why I asked if you were an alternative media. What the mainstream financial media has been focused on lately is whether any of these big US banks specifically have any exposure to Twitter and the Elon Musk buyout. When that it does not affect the average person and their 401k and their home. And it drove me crazy. I'm looking at this and they're like, how much have you lost on Elon Musk? I'm like, why do I give a flying fuck about that?
Yeah.
I mean, that's their problem.
I think that's going to be a cultural difference between U.S. and Canadian financial media. This is actually pretty interesting because I'm reading a book on this right now where it's like future of business journalism. And one of the biggest criticisms he has is that financial media, and I won't say that Canada,
Terrible here.
Yeah, well, Canada is not immune to this either. Sometimes we focus on Wall Street in your case, Bay Street in my case, as opposed to Main Street, like what actually impacts the regular guy and gal there. And yeah, like how much the banks lost on Twitter is not important. I didn't even see those headlines, and that's kind of stunning to me that's how they kind of approach their. I guess because they know Twitter gets any mention during that whole hullabaloo there, got a lot of clicks, but that's not how you should approach banking reporting. So what I was looking at is basically, once you get past the top line details of, they profited by this, that, the other thing. I wanted to get a temperature check on what they're feeling with the economy, what they're seeing on their balance sheets. Are they seeing more foreclosures? And it seems like things are quiet right now, but the loan loss provisions, I'm bringing back to that point because that's kind of like a demonstration of their caution right there. Just like putting aside, it's almost like a rainy day fund, just waiting for, just bracing yourself for in case something bad happens. So it wouldn't occur to me to ask a bank CEO what he thinks of the Twitter situation, but what they're feeling about Canadians' ability to pay for their mortgages or their confidence in economic indicators. Like there's a really good reason why banks have a robust economics team, and it's not just to show up in BNN interviews or talk to people like me. It's because they need to kind of map out how they work out their operations, where the weak points are, and they need to be able to make really smart strategic business decisions in a changing environment.
I actually have a BNN interview coming up.
Oh, is that right?
Today?
Yeah. No, I think it's February 4th or something with Jacqueline Hansen. She's great.
She's awesome. Yeah, I like her.
Yeah, she is great.
Okay, we just talked about sensationalism of American financial media. I was on the Joe Piscopo show this morning, and they called me this morning, saying, we got to talk about this debt ceiling thing. Jesus Christ. Okay. I mean,
I don't know what they're going to do.
Yeah. Okay. This is what they're going to do. They're going to grandstand and get sound bites, and then they're going to let it go past the deadline and then miraculously save us. Am I saying that anything's not going to happen? I know you're quite a bit younger than us, but we've seen this bullshit a host of times. It's not a real news story unless you make it one. Am I wrong, Steph?
I think there's more, again, with the cultural difference, more sensationalism in the US. And I get it. You're competing for people's attention.
You think you're better than us. You think you people are better than us.
I definitely don't think that at all. In Canada, no, we're...
Okay, come back to me on that point, because I think she does think it, but go ahead.
Okay. What I would say, especially I see this on the broadcast side. The US interviews are a lot tighter. They tend to be like 3 minutes or so. Canada, there's a little bit more wiggle room. They devote more time to guests. So it means that the message that the US or people showing up on US shows has to be that much more concise, that much more pithy. And like I mentioned, it's competing for attention. Obviously Canada's we're competing for people's attention. We're competing against Toronto Star, the Globe, Bloomberg. We have to always resist the urge to just do clickbaity nonsense, because that's not serving our readers. We do have to serve our readers at the end of the day, and that means, to me, not asking bank CEOs what they think of the Twitter situation. It means actually telling people what the experts are saying about the economy, or some stories that do really well. And this really speaks to me about this whole Main Street versus Bay Street thing, is that people are like tax stories always do well because people want to know, like taxes are very like vague and elusive. Like there are very few tax experts. So when there's like that resource out there that tells people what they need to know before going into tax time or anything personal financy or tells them how they can make smart financial decisions, at the end of the day, I think that's the information that people really kind of find value in our work. And on the flip side of that, obviously, there's going to be investors who want to make informed investment decisions. They want to know how company earnings kind of shook out and what's on their radar. So, but Bob, I'm interested in hearing your point.
Well, first, when Jimmy asked you what's the difference between Americans and Canadians, I say the difference is an American would actually answer that question and a Canadian wouldn't. America would actually say, well, here's where we're better,
Yeah.
Which actually makes you guys better, in my opinion. But my point, but see, she won't, I think she thinks it, but won't say it. Like, I don't even think you think it consciously.
You know what I wanted to say, and I resisted, but I'm just going to say it now. Sometimes I think there is a Canadian snobbishness that they think they are better than the U.S. or like they look at the U.S. and like say what a basket case that is. But then I look at basket cases around Canada. So I was very honest when I said I think we're very similar but different with our approaches to things. But I was trying to resist the Canadian snobbishness that I see crop up sometimes.
Well, here's where this takes me to the point of the financial news media. And this is, I think, honestly, it's kind of a direction that Jimmy and I want to take this show and the whole sort of push that we're starting to do since almost the beginning of last year is US financial media has become, especially CNBC, I'll name them, they've become the TMZ of financial media. One of the things I love about doing BNN, and I was glad it didn't change when it became BNN Bloomberg, because I mean, I did my first BNN interview, I want to say in 2011 or 12. I mean, it's been a long time. I did my first TV interview in 1999. Big poofy hair and a trading jacket on, right? It's hysterical. Jimmy might have done his prior to that, his first one. And the BNN interviews are still 10, 11 minutes. And they still remember what you said last time, which is probably not only the best part about it, but the scariest part about it to a certain degree. Because you can go on US financial news and say, you know, I think gold's going to zero. And the next time they're like, what do you think of gold? I think it's going to 2000. They don't know. They don't remember. And it drives me crazy when they end it with like, oh, we'll definitely keep an eye on this and we'll have you back to talk about it. And you're not back for 4 months, even if what you said happens. It's different when BNI, and actually Jacqueline Hansen is very, very good at remembering what I said last time. So I almost get a little nervous. I got to go back and look at the notes I sent her.
Yeah, it's good. Yeah, they keep you honest. I used to work at BNN as a chase producer and like would put together the packages. And yeah, there's a lot more research involved. But I would imagine that on the US side, there's also research involved. But yeah, the memories are shorter with it if you're just chasing your next soundbite there.
There's no research on the US side. They literally want to talk to you about what's happening over the last 7 minutes.
Yeah.
And it's honestly kind of
it's superficial, and it's filled with superficial people who are just more interested in their makeup than what the story is. Steph, offline, I'd love to tell you about my exit interview at CNBC because it's one of my it's one of my favorites. It was one of my. I was so proud of myself, and I made myself laugh, but none of them laughed.
I was proud of you too, Jerry. I was very proud of you.
That's hilarious.
But anyway, yeah. So we're going to be wrapping this up in a couple minutes, I assume, because we can't keep you all day. What's the major takeaway from here today? And I do like the fact that where we drew a radar toward financial news, because I do think it's bullshit. And what Bobby and I are trying to do is the sponsorship we're going to get, we're going to make sure that we can say whatever the hell we want. If you don't want to do that, don't sponsor us. We talked about the economy. Coming from you, it doesn't sound like you're as necessarily pessimistic about standard living, economic condition going for the next 3 or 4 years. Are you, or are you not?
I think things are pretty bleak, and going back to the suffering point, a lot of people are going to struggle for a bit. Honestly, I'm not an economist, so I can't. I have trouble.
Yeah, but you talk to enough of them, seriously. And again, and they're full of shit too. You know what I mean?
I'm not gonna, sorry, that was a retreat. That was lame. But yeah, honestly, I'm a bit more optimistic. because, you know, I'm young. There's a bit of a young and dumb element to it where it's maybe I haven't seen this before. This is a downturn. A lot of shit's scary right now, but no, I have an optimism where we're still seeing a strong economy, and maybe that can go south pretty quickly. But so far, you know, I've braced for impact in the last few months of 2022. And that impact never really came. So, and I'm not saying it's not going to come. Obviously, there's going to be a downturn. You know, there's a lagging effect to these rate increases that we're going to see over the next few months. And I do believe a recession is going to happen, but I don't know. Do I think the sky is falling? Maybe not. I don't know if we're going to hit a very cushy soft landing. I think the mild recession scenario is definitely what we're going to see, but I've been wrong before, so let's see what happens.
Roberts, what's your takeaway?
Sky falls a lot, but it never really hits us. So it's one of the funny things that I get from sort of younger people involved in finance now, where they think certain things, even though they've happened, aren't happening this time. And it's probably what I'm guilty of with the Fed, where I think the Fed is actually, and the Canadian Central Bank and the ECB are actually going to stick these things out. That's me saying this time is different. And I think Jim would say to me, it's never different. And I think a lot of people in sort of your age group and investing and trading, actively trading, are doing some really, really great things. But the sky can fall. They just have to know, I don't want to lose another generation of investors like we did in 2000 and then like we did in 2008, because that's exactly when you need to say, okay, it fell, it hurt, but I'm fine.
But it did fall in Bitcoin and Ethereum. I mean, they took 80% haircut. So I mean, maybe they are getting.
I mean, the NASDAQ in 2000 fell 78%. So
right, same sort of
happens.
shit. Steph, you have any closing words?
I'm really happy that I spent my birthday afternoon hanging out with you guys.
So. Oh no!
Happy birthday! Woo!
So yeah, thanks for making it special. I really appreciate it.
Yeah, you're
that's
like
awesome. Now I'm glad we're not doing it on Friday.
Right? Young people like us celebrating our birthday. Woo! So what are you going to do? Are you going out tonight?
It's
Go
actually
to Tim
rainy
Hortons for some coffee first.
Honestly, yeah, maybe. But no, it's like a beer, video games. I'm pretty low maintenance. Might just
I
make
got
it.
a question for you.
Oh, okay, let's hear it.
So recently I saw somebody, I don't even know who it was, but somebody tweeted that one of the #1 searches on Pinterest lately has been gamer girl.
Interesting.
And I responded, and that is what? And I still don't, this person didn't respond. So I don't know what it is. Is that something you're familiar with, or is that something this person made up?
Yeah, well, gamer girl actually kind of became a meme at a certain point. So it's supposed to be a girl that, and this is going to sound kind of vicious here, but like the meme says that it's a girl who kind of tries to ingratiate herself with gamer dudes by, she's a gamer. She's just like one of the guys. She's, like plays all the games. And I'm not saying that there's anything insincere about that. But I think there's a distinction between gamer girls and women who just play video games, and that just happens to be their hobby there. But I mean, I guess I'm a gamer girl in the sense that I like playing video games, but I don't think that's.
But you're not a gamer girl like this person probably meant.
Yeah, it's not the first thing you find out about me, and it's not something I'm like, advertising as broadly. But I also don't want to diminish women who like video games who are very vocal about it. But because
the difference between Canadians and Americans is on full display with that answer.
Right. And by the way, there's nothing wrong about anyone trying to ingratiate themselves with the opposite sex or the gender they're trying to pursue. I mean, I have no problem with it. People are disingenuous in the mating ritual since the beginning of freaking time. So if someone wants to, I think my wife pretended that she liked football. I'm just kidding. She does like football, but it's perfectly fine with me.
My wife pretended she wasn't better at sports than me, and she fucking is.
Oh,
Makes
wow.
me nuts.
That's nice. That's awesome. Yeah. So, anyway, what else we got? Nothing. Have a great birthday. Okay.
Thank you so much. Yeah, I'm looking.
And let's stay in touch. I think I just recently followed you on Twitter, so I'm looking forward to hearing reading some of your stuff.
Sounds great.
So, thank you.
That CNBC story. So we'll definitely take that off.
Oh yeah, please. It's a great one. Yeah.
Awesome.
I'll see you guys.
Thank you.
Cheers. Thanks again.
See you guys.